How's it going, everyone? It's Sam. I want to give you an update on a new stock that I just talked about the other day. A lot of people viewed that video because it is a really interesting stock. This stock has fallen 10% just over the last day, and ARK Invest has been buying it, one of the most innovative funds out there, one of the best investors out there. It's been dubbed the next Amazon, and if you compare it to its peers, it could go up, 3 to 10x from where it is now. I'll explain why those numbers are the case. And right now, the merger hasn't even happened to take this company public yet. So it does offer a lot of potential upside. And I'll go through all that and why I think I will be buying more in the following days. So definitely stay through to the end because there's a lot of good information here. Now, just a quick little plug for the second channel. I will put a link down below, but I tell you kind of what I've made on YouTube recently and tell you about my 2021 goals. I think it is important to set them looking forward for the next year because we are getting towards the end of the year. And I'd tell you about why I want to make $1 million on YouTube. So I'll give you why I think that is a reasonable goal. It's still a little bit of a reach, but I think it is definitely doable. I also post some other videos on finance, just ones that I can't post here. So if you want to see that, I'll put in the link down below. Definitely check it out after the video. The other thing I want to say too, if you want those 4 free stocks through WeBull, they increased this to go a little bit longer. So it was supposed to end yesterday. They increased it. So if you deposit $100, you can get 4 free stocks. Also, again, if you guys don't mind just hitting the like button, hit the thumbs up and just hit subscribe on the channel. I appreciate that too. So IPOB is the stock that we're talking about today, is dubbed the next Amazon, and it fell 10.5% today. It's up a little bit after hours, but this is a pretty attractive buying in price. And ARK Invest has been buying it. I'll show you here in a second, but it's been dubbed on Investor Place as the future Amazon of the $1.6 trillion real estate market. So this is a SPAC. It's merging 2 different companies, Social Capital and also Opendoor. So if you haven't heard of Opendoor, they are similar to like a Zillow or a Redfin. They're probably the closest approximations of them. And it's a very big market, the home selling market. I've talked about it in a previous video. I'll show you how big it is here in a second. But ARK Invest, which is one of the most innovative companies for investments out there, has been buying a good amount. So they hold a significant portion of this company, and it's highly speculative at this point. So they hold $52 million in ARKW, and then they hold about $14 million in ARKF. Now, they've been steadily increasing this. Every day they're buying more. Every day they're buying more. They just continuously buy, $1 to $3 million a week. They just continuously buy into this company. Now, again, they fell pretty heavily today. We will probably see it jump back up eventually, but who knows? This company is valued pretty high right now. So again, it came out just like most other SPACs at about $10 a share. That would have valued them at about $4.8 billion. And I'm not sure if I said that right in my first video, but that valued them at about $4.8 billion. And that was when it was at $10. So now it's valued at about $10 billion. If you take a look at their investor presentation, you can understand why it would be valued pretty high. They had a 2019 revenue of about $4.7 billion. Again, that's last year. They've been hit hard by the pandemic, but they are, they have a large amount of revenue. They've served a lot of people. You can see the real estate market is really one of the biggest, if not the biggest, markets in the U.S. You can see it says it's the largest undisrupted market in the U.S. There's food at about $1 trillion. There's used autos at about 841 billion. So this is a huge market, and a majority of the transactions occur by realtors that don't do more than 15 transactions a year. 66% are by those types of realtors. They say that the home buying business and selling business is really clunky right now. Now, there are some risks that I see, but again, there's a lot of potential upside, and I'll tell you why. First of all, I think a lot of people are worried about buying and selling homes online. I mean, you can imagine that, right? A lot of people like to hold and feel homes. They like to see them. They like to walk through them, check the water pressure. But the thing is, I think this could have a really good niche in investors. So for investors buying homes across the country, I think we could see a lot of people buying with this app, a lot of people buying with this website because of the fact that you don't need to be there. As VR gets better, we'll be able to pretty much walk through a house I think that's something that you can consider there, that maybe it's just for heavy investors in real estate. Now, they're in just a couple markets now. These are the first 6 markets. They have about $2.7 billion run rate from Q1 of 2020. So by that, it means that if you look at just Q1 revenue, multiply that by 4, that would mean that they would have about $2.7 billion in revenue. Now, they have about a 3.2% market share in these 6 locations. Now, these are pretty high growth areas. You can see Phoenix, Las Vegas, Dallas, Orlando, Raleigh, and Atlanta. I know that these are really growing a lot here. Now, they are in 21 markets overall. Their market share is much lower in these other markets, but you can see they're also in some other high growth areas like Denver, like Los Angeles. I know some people are moving out of there, but then they're in some other big Texas cities. And they have about $5 billion overall with 2020 Q1 run rate. So again, take that 1.25, multiply it by 4, and that's the $5 billion that they're getting to. I understand that they have had some issues with the pandemic. However, I will say, if they're able to increase their market share, they are expecting this. They want to be able to hit $50 billion in revenue, and that's just based on where they're trying to go now. They think that they can go to 100 different markets, so maybe 100 different cities, get about 4% of the market share, get about $50 billion worth of revenue. If they're able to do this, take a look at Zillow, take a look at Redfin, some of their competitors, and they are trading at a pretty high price to sales ratio. So again, right now we're sitting at about 2, and we do have to see the close of the merger. But if you take a look at Zillow, for instance, it's trading at a pretty high price to sales ratio. It's trading at about 6.8 right now, and that's as of today. So the other one that we can look at is Redfin. They're selling at about a 5.6. So let's take just Zillow, for example. If we were able to get up to this price to sales ratio, which I think we could actually get higher because we do expect a lot of growth from IPOB or from Opendoor. If we see that kind of growth, we could see it go up to a price to sales ratio of 7, maybe even higher. Even if it just hits 7, that would increase the stock by about 3.5x from where it is now. And that's assuming we don't grow in revenue. Of course, this year, their revenue is going to be down a little bit. They're expecting a lot less than last year. But let's say they get up to just where they were last year this next year. Let's say they get up to $5 billion worth of revenue at a price to sales ratio of about 7. Let's say that would put them at a market cap of $35 billion. That would 3.5x the stock from here. Let's say they double this the next year, and then maybe the price to sales ratio is even a little bit higher. Let's say it's at 10 because it's growing so quickly. Let's say they're able to get to $10 billion worth of revenue, price to sales ratio of about 10, like we said. That would send the stock up 10x from where it is now. Now, this is just an updated, a little bit of an updated video on the stock. I just want to come with this because I had some more thoughts on the stock. I feel good about it. It is more of a speculative play because right now with the pandemic, anything can happen, especially with these types of companies. But there is so much growth, especially compared to its peers, and so much potential just from a price to sales ratio, from a growth perspective, from a revenue perspective. I think this company could blow up. It could be an easy 10-bagger over the next couple years. And, only time will tell. Definitely do your own due diligence. Definitely do your own research. But again, I feel pretty good about this. Now, if you want to see some other stocks that I've been thinking about and some other stocks that I think could 2x, 5x, or 10x, you can definitely check out the video that I had from earlier today on that. Also, if you want to see maybe how much I make from YouTube on this channel, you can definitely check out my second channel. It will be linked in the description below. And check out WeBull if you want those 4 free stocks. Thank you guys so much. I appreciate it. Thank you for hitting the like button and subscribing. And I will see you in the next video. Bye.